deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa, trade to celebrate.
Buy and sell, trading all the way.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell, trading all the way. Oh, what fun is to trade with Octa Office Day.
Explore our holiday trading offers. Win outstanding prizes. Claim a 100% deposit bonus. Octa. Trade to celebrate.
Buy and sell.
Hey everyone, let's do a quick sound check on my side because I need to know. Obviously we're doing it from a new setup here, and definitely need to check on my sound quality here. Let me know if there's any issues. I'm just assuming that no issues so far. Okay, audio seems to be good on my side. So welcome back to the final CPI for 2023. Obviously, this is a big one because this is going to be the final CPI data that the Fed is actually going to take note of for 2023. Obviously, the Fed meeting is going to be on Wednesday. Actually, it's actually going to be on Wednesday. But it will be Thursday in some part of the world, including my side. But yeah, okay, loud and clear. So this is new trading session number 3. This is going to be inflation. We're going to focus on the CPI numbers, obviously. My name is Vidya. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary, does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be attentive when determining the volume of your transactions and consider all possible risk factors. Also, there's going to be a promo code to double your deposit bonus. I'll show this to you after this slide, and you should have access to the private Telegram channel if you are registering this through email. And also, don't forget the holiday season is here, so make sure to take advantage of that. There's going to be lower spreads. Also, there's going to be double deposit bonus thing if you register for the promotion. There's obviously going to be the draw that's going to happen on the 26th of December. I believe it's 26th of December. Yeah, it's Boxing Day. So 26th of December. First prize, I believe, is a Rolex watch. And then you should have the chance to win 5 Apple Watch Hermes edition. And also new Octa merchandises. Yay. All right. So just a little bit about myself. I've been a full-time trader for more than 20 years, actually, coming into the 20th year for full-time trading, but more than 20 years in terms of trading. Professional trading coach and technical analyst since 2007. My expertise is in Ichimoku Kinko Hyo technique. I'm also director at Zenifix, an independent market consulting company. I've been guest speaker at Trading Investing Expo across Australia, Invest Fair in Singapore, ATA and APTA conferences. That is the Australian Technical Analysts Association, as well as the Australian Professional Technical Analysts. All right. So this is a promo code to use for this session here. It's non-farm 2023. So if you're depositing into your Octa trading accounts, make sure you are using this code to double your deposit bonus. Okay, cool. No issues so far. Everything is good. Yeah, perfect. Okay, so we are going to talk a little bit about inflation. Obviously, we're going to talk about the upcoming data itself, right? So what inflation is, what's the CPI, and we also take a look at what the core CPI is as well. All right, and then we'll jump into the live trading for CPI and a few notes to take away about. I'll discuss this a little bit later. All right, so let's take a look at what inflation is. Inflation is the rate at which prices for goods and services rise, and the most commonly used inflation indices are the consumer price index as well as the core inflation. We are also having the PPI numbers, which is going to get released tomorrow. So inflation is unavoidable. So let me just put out a note there. As the year goes by, your currency loses its value because products for goods and services. Price for goods and services does rise up every year. Okay, so that's inflation. And what's the CPI? So the CPI is a critical indicator of pricing pressures in an economy. It provides a gauge of inflation, and forex traders monitor the CPI because it can lead to changes in monetary policy conducted by the central bank. And for the case of tonight, that's going to be the FOMC on Thursday. All right. So once the central bank decision happens, that could either strengthen or weaken the currency against the rivals in the market. And that's basically the main focus for our session this week. All right. So CPI, it measures the cost of living. So when we talk about CPI, it's actually on the consumer side. So it basically is... it measures how much we actually spend for our basic necessities. So it will include broad ranges of goods, services purchased by consumer. It also includes international personal consumption items, and the scope excludes changes in interest rates or costs. Now the PPI for tomorrow, that measures the real growth in output. So it's really more on how much it costs to produce an item, right? The CPI is how much it costs for us to buy something. The PPI, it basically measures what it does, how much it costs to make that item or provide that services, okay? So it will also include items produced for personal consumption. It does not include imports. and encompasses services with prices including an interest rate component. So when we talk about the CPI and the PPI, obviously the CPI measure is much more important because it measures how much it really costs in the real world to buy something. The PPI, it's the cost of the producer. For us, as a trader, both of them are very important because any major shift in the CPI or the PPI is definitely going to impact a lot of decisions made by the central bank. In the case of the FOMC, we'll talk more about that in a minute. All right, so the other number that we are looking at is the core inflation. So the core inflation refers to changes in prices of goods and services, excluding those from the food and energy sectors. This item excluded from this measure of inflation because their prices tend to be more volatile. So typically core inflation is determined using the consumer price index, just excluding some of the foods, fresh produces, those are excluded. Gas prices, oil prices, those are going to be excluded as well because it causes a lot more volatility because fresh produce is affected by seasonality. When we talk about packaged foods, those are going to be included in the core CPI. Okay. Now, for tonight's number, we're actually looking at 4 sets of data. We are looking at the yearly numbers, right? That's what we call the CPI year on year. That's the headline inflation. That's definitely the main focus for a lot of traders. And then we also have the core CPI numbers. The core CPI is actually the underlying inflation. That's the one that's being monitored by central banks. Then we have the monthly change. So we're actually looking at 4 sets of data. 2 for the CPI year on year and month on month growth rate, as well as the core CPI year on year, as well as the month of month growth rate. Okay, so we are going to take a look at the calendar and history. There's a lot to talk about this CPI number, but we'll break it down in a minute for you guys. But the numbers that we are expecting for tonight, and I don't have a bias, right? Because I think there was already some chat asking me whether it's actually going to be a buy, whether it's actually going to be a sell. You know, I don't have a prediction, and that's not the way we do our live trade. When we do our live trade, we'll just do whatever price tells us what it is, and we'll react to price as soon as it's possible. We've done this through the NFP sessions, and we also did the first theory sessions where we talk about the order types. We are going to be using the buy stop and the sell stop order for tonight. So I don't have a prediction, and it's not in my taste to actually come in to CPI releases or NFP releases with any bias. I don't have any bias. So if you're asking me what do you think, is it going to be a buy, is it going to sell? we'll wait until the data is released. We'll set up our orders. If it hits, it hits. That's the trade we are going to take. Okay, so it's the orders that we are actually going to be doing, that's going to be very limited to just this event. And the whole point with the NFP sessions and CPI sessions that we've done for more than half a year right now is that we want to get in and we want to get out as quickly as we can. We do not want to stay too far in a trade. There's a lot of risk, and especially for this week, so much hinges on what it is. Do not have a swing position, because whatever price does today can be reversed by what the FOMC's dot plan projection is going to be. I'll explain a little bit about the dot plan projections, but a lot of you guys that's been following my webinars would understand what that dot plan is. Let's take a look at the number for tonight. Previously, we have 3.2% on the inflation rate of year on year. This is the headline inflation. This is the main number that we're actually looking at. The consensus is going to be at 3.1%. So we're expecting a 0.1% drop for the headline CPI. If it drops below 3.1%, let's say it drops in at 3%, it's probably going to be a little bit negative for the US dollar. If it drops even lower below 3%, then the market is probably going to be thinking like the FOMC is probably going to start doing some rate cuts earlier in 2024. So I'll talk more about that rate cuts in a minute. The core inflation is the main focus. Right now, the consensus and the previous number is at 4%. So we're not expecting a change in the core inflation rate. That's a consensus. But we'll see what happens. If the inflation rate does drop down very significantly, let's say it comes in below 3%, the core inflation could likely drop below 4% as well. And if this comes in below consensus, that means the inflation has dropped off in America, and the FOMC will probably start thinking about doing rate cuts or starting to ease up on the monetary policy. That would have a negative impact on the US dollar. So I think that's what the market is anticipating today. I think market is really anticipating a drop in the inflation number for the US session. Sorry, for the US numbers. To me, it doesn't really matter. We're going to react to price. I don't have any bias at all. I'll react to what the actual result is. But from the consensus, I think the positioning in the market is that for the inflation to kind of cool off a little bit. Now, the reason why I'm not too sure about whether or not the number is actually going to be low significantly, take a look at the month-on-month growth rate. The consensus would be at 0%. Last month, it was at 0% growth. So we didn't actually see inflation picked up in the US, right? If that inflation growth ticked up above 0%, so let's say 0.1% or 0.2%, that still indicates inflation is still picking up in the US. Now, the reason why I don't want to have that bias with a lower inflation number, the core inflation rate month on month is expected to pick up from 0.2% to 0.3% growth. So we're still looking at a possible underlying inflation not cooling off. And that's the only reason I don't want to have a bias for tonight. Will tonight's CPI data still have an influence on tomorrow's FOMC? Isn't that Fed's decision final? The meeting itself is actually it's actually a 2-day meeting, right? So it leads up until the decision that they make. So yes, it will still price into their decision. The PPI tomorrow will actually still price into the FOMC's decision as well. So I don't really want to have too much of a bias. That's number one. And talking about the outcome itself from the FOMC, let me just explain a little bit about what happened last week. So last week we have a little bit of a wild speculation in the market, okay? And you probably see how gold spiked up last week, and we put out an outlook saying like, don't buy into that. The US dollar is not that weak, right? So the speculation is for 5 to 6 25 basis points rate cut in 2024, starting in March 2024. I think that's a little bit too early. And from what the FOMC's been commenting, they keep saying that interest rates should still be higher for longer, right? That gives out the intent that they might not want to ease up on the monetary policy too early. Because if they do it too early, whatever they've done would have gone to waste. And I think the market is speculating too much. So with the NFP numbers that has popped out this week, we actually do have a little bit of a reduction on the potential rate cuts that's already priced in by the market. So right now, I think the market is pricing in for about 100 to 110 basis points in 2024. So they're expecting a 1% or maybe 1.1% drop in interest rate in 2024. Right now, it stands at 5.5%. And the FOMC's decision this week comes with an economic projection. That economic projection, the main focus that we want to take a look at is the dot plan projection, because the dot plan projection will actually show us the final confirmation. Looking at the current state in the economy, obviously that's going to change every quarter, but we would actually have a solid official answer from the FOMC. How many rate cuts that's likely going to happen in 2024. Now, market is expecting a 100 to 110 basis points, so that's 1% to 1.1%. So if the dot plan comes in higher than 4.5%, let's say it comes in at 4.75%, that means there's going to be less rate cuts in 2024. And that could actually reverse whatever we see today. So if, let's say tonight, we saw a inflation cooling off, right? Sorry. So let's say tonight we saw inflation cooling off, but if the FOMC comes up with a dot plan that is higher than what the market is speculating, it would actually strengthen the US dollar itself. So even though we might see the US dollar weaken for today, the whole situation might actually reverse tomorrow. Okay, so it will actually change a lot of the dynamics itself. What pairs do we trade? We'll try to put in as much as possible. We're not in a rush. I think we are actually ahead of time. So we actually have about maybe 10 minutes to set up our trades. So if you have any requests on whatever pairs you want to trade, just put it in. But I'll go through the majors. Obviously, we'll do the Aussie USD, Euro USD, Pound USD, Dollar Japanese Yen, and Gold. We'll also do Dollar Canadian and Dollar Swiss. Just a little bit of a reminder. I think a few of these instruments cannot be traded today. At least we can't actually create a buy stop and sell stop. It doesn't have that accumulation phase, and I'll show that in a minute. Okay, so just a little bit of a breakdown for the United States inflation rate. This is the headline CPI. You can see the trajectory for the past 12 months. We've actually seen inflation picked up ever since the July number, but it's kind of hovering above that 3%. So it is a big deal if it drops below 3% today. Okay, that's going to impact negatively on the US dollar itself. By the way, the numbers that we're looking at is actually not the December number. This is actually the November's inflation number. Yeah, we'll do gold. Don't worry about that. I'll definitely do gold. All right. So the other one is the core inflation number, and you can see the core inflation number is actually a little bit more steady. It is kind of bottoming out at about 4%. So tonight it's actually pretty important because the core inflation could drop below 3%. The core inflation could drop below 4%. The headline inflation could actually drop below 3%. The worst case scenario for the US is actually when inflation drops down below these two numbers, the headline inflation below 3%, the core inflation below 4%. That would be very negative for the US dollar. Just keep that in mind and be ready for today. That would be my view, right? If it comes in higher, then obviously the Fed is not going to do the rate cuts. I think a lot of traders are probably going to pricing in for a little bit more of a hawkish FOMC, but we'll see. I don't really want to speculate on the FOMC's decision. Just want to see the dot plan projections itself. All right. Some of you guys that have access to my Telegram channel, I will update you on the FOMC's dot plan prediction. Okay. So let's take a look at some of the previous numbers with the CPI. It typically runs very quickly in one direction, and it doesn't have that long. So probably about 30 minutes, 45 minutes, or even an hour, and then it might actually stall. In terms of how the market looks like, typically it kind of reverses on itself, and this is the reason why I don't want you to have any swing positions, especially with the FOMC meeting so close. So just be mindful. Whatever we are doing tonight, we just want to get in. We want to get out as soon as possible. The last record that we have was the NFP last week. That was 45 seconds, right? Less than a minute. So if the trade doesn't take long, it's good for us. Okay, we don't really want to stay too long in the trade anyway. If you see some profits, make that decision. If you want to stay in the trade, move your stop loss to break even. If you are happy with what you get from the initial run, then get out. Okay. As I said, if you're looking for Euro USD long, dollar Swiss short, I don't have a bias at this point in time. I will come into this very neutral. Anything can happen. Don't want to have our orders too close to one another as well. So we'll start setting up our orders. This is about 10 minutes ago now. All right, so this is another example as well. You can see the reaction in the market. Initial spike to the upside, and then it might actually cool off a little bit. Continuing the trend, or is it going to be a reversal? We actually don't have a preference, unlike the NFP numbers where we typically look at the fade and market just reversing. In fact, last NFP numbers, we actually did a limit order on a pound USD fade, and we actually got out from that trade as well. So again, I don't have a preference for what it is tonight. So let's switch to the charts. Let's start placing our orders. Okay. So let's start with gold first. So with gold, this is actually pretty good. It kind of pulls back up, pulls back down a little bit. This one here, you need to be a little bit more careful. Do not place your order too close to the recent high. You might want to have it a little bit higher for gold. In fact, for gold, I would actually start placing my buy stop a little bit higher, maybe about 1995. Okay, about 1995, 1995.50. That's about the level I want to have my buy stop for gold. I'm actually using the hourly range. I would actually switch down to the 15 minutes to find the lower end of the range itself. Now for 1995, that's still way above what it is. I would actually have my sell stop not too far down. Probably below 1985. I would probably have it about 1982. So I'm giving a little bit more space for gold here. This is a noticeable distance as well, because if we measure it, it is about close to about $18, right, in terms of range. That's about it. I would have my buy stop at 1995, yeah, and my sell stop at 1981. If you're wondering how to make that pending order, you can obviously go to new order, select pending order, and set it up that way. You want to use the buy stop and the sell stop orders, but I already set it up. So all I need to do on my MT4 is just to right click. If you're trading from your mobile phone, just create a new order. Make sure you're selecting buy stop and sell stop. You want to have a buy stop at 1995, a sell stop at 1982. Okay, this is for gold. Right. If you're using MT4, feel free to just right click on the chart. Now for Euro USD, this one here is a little bit unique because we are dealing with that 1.08 key level. For the buy stop, you don't want to have it anywhere near the current level. You actually want to have it a little bit higher at 1.0825 or maybe 1.0826. It's only one pip. I would have it at 1.0826. Okay. Now for the sell stop on the Euro USD, this one here is actually a little bit tough, but if you do want to have it, definitely want to have it below 1.0790. I would probably have it a little bit lower, about 1.0780. So that's a little bit of a gap as well. The reason why I put it that far away, I don't want to have my buy stop and sell stop triggered. If you are new to these trading sessions, if any of those buy stop or sell stops are triggered, you need to close the other one. Okay, so let's say the Euro USD hits the buy stop, you need to close out the sell stop. Okay, now for the pound USD, the buy stop would actually be a little bit higher. Okay, I don't want to have it anywhere near this level. I do want to have it at 1.26. Okay, so the buy stop is going to be at 1.26, and I actually have a projected exit for the buy stop. You probably want to get out at about 1.2625 if the buy stop hits, because there could be a potential liquidity sweep that could happen in the pound USD. Obviously, my preference would actually be the sell stop that's actually going to be triggered. The sell stop is going to be a little bit far. It's going to be about 1.2555. Okay, I'm giving it a little bit more room just in case. So we are actually dealing with very important key levels for the Euro USD and the Pound USD. So that's the reason why I'm actually giving it a little bit more space. And for the buy stop, specifically on the Pound USD here, I actually do have a profit target. It's going to be at 1.2625, and that's it. I want to have my take profit for the buy stop at 1.2625 because I'm actually super worried about a potential liquidity sweep that could happen with pound USD. The dollar Japanese yen, this one is a little bit tough. As I said, we might actually not have a sell stop on the dollar Japanese yen and the dollar Swiss. I believe this two is the one that's currently being pressured a little bit lower. The market has been moving. There's no accumulation phase that's going on the dollar Japanese yen. You can see what's going on here. So with this one here, you can have a buy stop, but you will not have a sell stop because that's too risky to have a sell stop. The buy stop is going to be about 145.65, just a little bit out of range for this one here. The sell stop, unknown, because if we go by the hourly time frame as well, it's really hard to tell where to actually put the sell stop. You can actually have it here, but it would probably be a little bit too far from where we are. If you want to have that sell stop, maybe have it at 144.75. The range is a little bit too far. We can't have any sell stop or buy stop too close to where we are right now for the dollar Japanese yen. The dollar is also a similar situation, but we'll come back to that in a minute. We are going to go through with the Aussie USD. Aussie USD, you do have a little bit of an accumulation phase that's going on. So the buy stop, you can have it at about 66 cents, right? Again, this one here, make sure you are putting out your take profit at 66.25, 0.6625. Hopefully it doesn't trigger before the news gets released. Okay, and the sell stop, you would probably want to have it a little bit lower than the current range because this is actually a very small range. You would want to have it about below 65.75. Okay, the pound USD and the Aussie USD is too close for comfort right now. I think they are picking up a little bit. It's way too close, but we'll see what happens. The dollar Canadian, you can have a buy stop, but I don't think you would actually have a sell stop for the dollar Canadian. For the dollar Canadian, the buy stop would come in about 1.3575. Okay, the sell stop will be below this low here. And below 1.3550, you would probably want to have it a little bit lower, below 1.3545. That would be for the dollar Canadian. The dollar Swiss, this one here is tough. Unfortunately, I don't think we are going to have a sell stop on the dollar Swiss because if I go into the hourly time frame, the sell stop would actually be way down there. It would actually be below 87.25, and that's really pushing it. Okay, and the buy stop, it's going to be above 87.85. The range is too big. It's too far. I'm not too comfortable with the dollar Swiss. I'm not too comfortable with the dollar Japanese yen. The range is just too big and it is too far. Okay. So gold. Yep. Gold, we already set it up. Gold, you want to have it at 1995, the buy stop. And the sell stop, you would want to have it at 1982. All of the order types are listed here, down there, and we need to react very quickly today on the news reaction. Okay, as I said, I don't have a preference, so we'll just take whatever the market gave us today. And pound USD and Aussie USD is already too close for comfort. It's within a 10 pip trading distance. All right, the news is going to get released any minute now. So need to refresh your calendar. while we'll wait for the trades to happen. Okay. So gold, buy stop 1995, sell stop 1982, buy stop for Euro USD 1.0826. Market starting to move. What's the reaction? Core inflation at 4%, unchanged. Everything is as per consensus as it is. We actually core headline inflation dropped down from 3.2 to 3.1%. All right, pound USD, Aussie USD. I got triggered on both sides for the Aussie USD, which is not good. But let's close out the rest of the position. So buy stop on Euro USD got triggered. The dollar yen, nothing got triggered. The dollar Swiss, we got sell triggered. So I'm going to close my buy. This is not looking good because I'm currently hedged on Aussie USD. So let's see what happens here. So gold need to clear the sell stop. Buy sell for the dollar Japanese yen, dollar Canadian are still running. Okay, my MT4 is having a little bit of a problem loading up the chart, but I'll go through. The orders are still running, which is good. All right, I'll go to TradingView for a little bit just to see what the market reaction is. I'll be more concerned with the pound USD. We already set up our target level at 1.2625 for the pound USD, which is not a big deal. The Euro USD is kind of struggling a little bit. Ideally, you really want to get out from the Euro USD as soon as you can. A spike both way too much. And I think my order entry is a little bit too far in between. Dollar yen got triggered. Dollar Canadian got triggered, so all trades are triggered with the exception for the Aussie USD because it's kind of hedged right now. Orders was too close. We got hit on the buy stop and the sell stop. All right, so I'll need to monitor from TradingView. I think there's a problem loading up my chart on the MT4, but we'll see what happens. So the news that comes in, let's take a look at the monthly number. The rate of change, growth per month on the inflation number is actually picking up. It's actually 0.1%. It's not 0%. The core inflation rate growth rate is also growing at from 0.2 to 0.3%. But everything is as per consensus. The headline inflation does fall off from 3.2 to 3.1%. Core inflation is stable at 4%. For now, market's kind of freezing, but it should be negative for the USR at this point in time. It's just that I'm worried about the growth rate number on the MOM for the core inflation growth rate as well as the monthly growth rate on the headline inflation. All right, so let's see if I can get out from what it is. Let me just restart the let me just pin this, but not looking good right now. Let's see what happens in the next 50 minutes. Yeah, it spiked both way on the trade there. This is not looking good. Market is actually pretty flat. It comes back to where it is right now. So we actually spiked both sides on the Aussie USD, which is not good. I actually might cancel out on the Aussie USD because it's definitely not looking too good on the Aussie USD. Right, so let's take a look at everything else. Okay, still crashing. So yeah, okay, good. Triggers 1995. Didn't trigger 1982. So for now, for gold, this one here is still okay. I just need to get rid of the Aussie because the Aussie was hedged. Both buy stop and sell stop got triggered. In situations like that, I typically just let go of the positions. All right, so let's do our stop loss placement for the Euro USD. Definitely want to have it below that swing low, but I think it's a little bit too far for the Euro USD at this point in time because we're looking at a lot of stop loss here, but we still need to have a stop loss. Okay, so we want to have it lower below the initial stop loss. That's about 43 pips, which is pretty significant, but you know, it's much better than without a stop loss. We already have a positioning on the Euro USD and the Pound USD. Okay, for the Pound USD, you definitely want to have it a little bit lower in terms of the stop loss. Let me just adjust it. It's too close for comfort because I think the market is concerned about the monthly growth rate. It should be at 0, but we are still looking at inflation growth happening in the market. This is not too good. I would probably need to close out on my positions very soon on a lot of this. But we'll wait. We've got 10 more minutes and see how the market reacts in the first 50 minutes. And my MT4 kind of crashing a little bit. It's not really helping at this point in time for that position adjustment. So let's take a look at it from trading view as a backup. Right, so this one is a little bit better. So make sure you have your stop loss for the Euro USD below 1.0780. That would be a stop loss for the Euro USD. In terms of target level, we should have set up our take profit at 1.0825. I am still concerned by that. So we got in at 1.0826, got in a little bit higher. But yeah, I'm just concerned it would actually be a liquidity sweep that's happening on the Euro USD and the Pound USD. We'll take a look at that. This one here is pretty neutral at this point in time. No point panicking as of yet. I just don't see a lot of change at this point in time. On the Euro USD and the Pound USD, we've got the buy stop triggered. Let's go with that. In terms of stop losses, you do want to have your stop loss below 1.2550 at max, because Pound USD below 1.2550 gets a little bit dangerous. And for gold, I would actually go on to. So yeah, this was the outlook that we have on the Pound USD today. So there's a little bit of that order block around 1.26. We actually have a different separate order for a sell in Pound USD. Let's take a look at gold. This one's not looking too good either. The concern that I have is that we might actually shift from a rising wedge yesterday to a potential flag today on gold. Point of recovery, I think we should see a little bit more movement. I think we can target 2,000 for the trades that we have on gold. Okay, stabilizing, which is good. Dow Japanese yen, I'm not liking the Dow Japanese yen at all. I just don't like the Dow Japanese yen at the current price action for Dow Japanese yen. For gold, you probably want to have your take profit at 2,000. I think we can still target 2,000 at this point in time. I'll go a little bit higher. Okay, I need to be able to adjust my gold position. This is not looking too good, yeah? You want to have your stop loss at 1982. The opposite side of our sell stop, buy stop and sell stop would be our initial stop loss anyway. All right, we got our stop loss for the Euro USD. We set it up for the Pound USD already. That's great. For the Dow Japanese yen, I'm not liking the Dow Japanese yen. I think I might want to get out from the Dow Japanese yen. I just don't like the way it is right now. I would probably have my stop loss about 146. I don't want to have it any higher than 146 at this point in time. The range is just too big for the Dow Japanese yen. All right, Aussie USD, we are out. To Dow Canadian, we triggered a sell. We should have our stop loss just here because it's getting too risky if it gets out of the current range on the Dow Canadian. Just slightly above 135.75. Yeah, but 135.77. That's our stop loss. Dollar Swiss, might want to get out from the dollar Swiss. It really depends. If it does pick up above 87.60, should be manually closing out the dollar Swiss position. Okay. So yeah, overall, I think we are still within range. Not looking too great. I think it's more of a whipsaw that took out our stop orders rather than anything else at this point in time. It's tough. Look, it's a really tough trade, and I would be more than happy for the stop loss to actually take out all the trades here. It is a tough CPI news. If the growth rate actually, if the growth rate actually didn't pick up, I think it would be okay. But I think the growth rate picking up, I think that's a little bit of a problem. Would it change any sentiments in the market? I think the way we look at the monthly growth rate, what you can see in the market reaction here, this is going to be a little bit choppy. So bear with it. Just make sure you have your stop loss. We're not done with the first initial 15 minutes anyway. But with the growth rate that picks up, the way the news outlet is probably going to push it out is this. Inflation cools off, but monthly growth rate picks up. That would be a concern because the FOMC would say, look, we have the inflation coming off, but we still sense a little bit of a growth in the inflation because the monthly growth rate does still pick up. I don't think it's major. I'll be honest with you. I don't think it's major. I don't think the numbers that we have is actually going to influence the FOMC's decision. I think the FOMC is probably going to come up with a dot plan that's probably going to be less rate cuts in 2024 than. But yeah, immediate CPI is best, but this have a lot of news this week, and it is as expected. Yeah, look, it is a little bit choppy. I don't like the price reaction. It is as it is, because technically, what you're looking at is a little bit of a wick here and there, but the body itself, in terms of pricing, is actually still within range before the news was released. Crash landing on you. I mean, soft landing and crash. I don't think it's going to be a hard landing for the US. We still need data like PMI to know if the economy has a slowing down, right? GDP is the number that you want to look at if you want to look at the economy slowing down, but I don't think that's going to be a hard landing for the US. Yeah, CPI data wasn't low enough to go further with cut pricing. Rate cuts, yeah, I don't think it's actually low enough. What will be the stop loss if I manage to pick up short pound at above 1.26? Your stop loss would be at 1.2625 and nothing more. Actually, the stop loss for that is going to be a little bit tough. Let me just give you a little bit of the outlook on the pound USD. This one here is actually posted on the Telegram channel that I managed today. So we are actually buying for a little bit of a short in pound USD, and the reason being there's actually another block between 1.26 to 1.2625. The concern was there could be a potential liquidity sweep that happens with pound. So I think for pound USD, the trajectory is actually still to the downside, but I'm actually not going to release the position that we have as it is. We have our stop loss. If it hits the stop loss, that's completely fine. But if it is the current trajectory, because we're looking at the hourly time frame, obviously, we need to break for that 1.2550 anyway. If you have that position on the pound USD above 1.26, you would still need to have your stop loss at 1.2625. You could move it to 1.26, but this is still first 14 minutes. We don't know what's actually going to happen. If you want to put your stop loss for now, I would still have it at 1.2625. But once the hourly has closed, you can move your stop loss to lock in some of the profits. You can have it at 1.26. You can have it at 1.2580. I think that would be fine, depending on how we move away from the current price. If it's stuck like as it is, I would move it to 1.26. Okay. All right. Well, that's a pretty disappointing 15 minutes that we have. I think some of the positions got hit with a stop loss. Let's take a look. No, still good. Gold still good. Euro USD is about to get hit with a stop loss anyway. So Euro USD is probably going to go out about 40 pips negative. First 50 minutes close, we just got stopped out on Euro USD. And a lot of the stuff we got stopped out. Pound USD got stopped out. Dollar yen, I don't like the dollar yen as it is. I might actually want to close out the dollar yen rather than this dragging on further. So for dollar Japanese yen, it's up to you, but I don't like where it is. I would actually close out the dollar Japanese yen. Dollar Swiss, I also don't like the dollar Swiss as it is. I would go with a negative 50 pips, unfortunately. All right, gold. This is problematic. What are we going to do for gold? If you reverse the position, I wouldn't actually do that if I were you. If don't reverse the positions that got hit just now. I think market is still a little bit wishy-washy. But if you go with gold, obviously we still have a little bit of a floor for gold. As I said, the only concern that I have for gold is that we could actually be forming a flag as it is. At least on the early time frame, it's starting to form a little bit of a flag. So if it hits the stop loss at 1982, it's fine. Do not reverse. Just be a little bit more careful. CPI needs to print at 2%. Well, 2% it's way off, right? 2% it's so far away. That's a 1 full percentage drop. Oh, thank you. Yeah, that's the one trade I was actually eyeing for today. Can I ask about XCI because I have a short at 71.8? Yeah, let's take a look at XCI. Shouldn't have an immediate impact on the XCI. XCI, I'm okay with XCI for if you have a short. I think you should be locking out your positions right now because you have a short at 71.80. You would probably want to move your stop loss to lock it at 71. Because if oil does pick up above 71, it's actually going to move away above the Ishimoku cloud. That could actually be dangerous for your short position on oil. Ideally, I don't want to touch oil. It's a little bit too risky touching oil at the current price level. There's just too much production at this point in time. And the concern as I have, and I know you were in the webinar last night, we talked about the non-OPEC production. It is still way above than what the OPEC's voluntary cut is going to be. So I don't think it's actually able to maintain the current price level. But we still have support at $70, so just keep that in mind. Ideally, if it does break below the Ishimoku cloud on the early time frame, I would keep your short position. But if I were you short it at 71.80, I would move my stop loss to 71. Okay. All right. So no brainer. I don't think it's a fun CPI trade. I think this is the second trade in the past 7 months that we did for the NFP and the CPI that ends up with losses, which is still okay. We're not gonna get away with all profitable positions, but I just don't like the price action as it is. I don't like where it's going right now because if we take a look at this is very, very choppy. It's just triggering our buy stop and sell stop, and it's starting to pick up again. Okay, so it depends. If you're trading without the stop loss until the first 1 hour, I think you should be fine. But think about it: if it's able to come back to your entry price, I would get off the trade. Simple as that. For now, gold's still holding on strong. It didn't hit 1982, which is okay. I think we give it enough time. Yeah, 1.2550 is definitely a tough nut to crack. Yeah, I would agree on that one. Yeah, that is trade. I'm pretty okay with it. It's not a big deal. I mean, out of the performance for this year, I think this is our second one. I don't think the first one was actually one of the NFP where we got a little bit of a revision. that was a little bit confusing. I believe it was August. I think that was one live trade that we actually did pretty bad. And then this one here, this is actually pretty bad because the range was so big, and the stops that was taken out, I think it was about 40 pips each, roughly. All right, so let's talk a little bit more about pound USD. Okay, so yeah, definitely 1.2550 is a tough nut to crack, and the concern that I have on the daily time frame, it is actually still hovering above 1.2550. Okay, so we still have that selling pressure at 1.26, obviously. And we mentioned it in the outlook, the intent to sell at 1.27, right? It was there. It moved to 1.26. And I still have confidence that the sell at 1.26 is still there. We still have that accumulation that goes on. And if we talk about the theories that we have on the SMC, obviously, what we are looking at is a little bit of an order block at 1.26, right? I think we have an accumulation that happens, a sell accumulating short positions at 1.27 and at 1.26. So we're still looking at that. It's still below the weekly pivot on pound USD. So I think breaking below 1.2550 is just a matter of time at this point in time. Okay. All right. This one here for gold, I think this is the only remaining positions that we have. The stop loss, I wouldn't move it. I would still have it at 1982. I would actually adjust it a little bit lower for gold, 1982. Just like round numbers a lot, so about 1982. And in terms of target level, I would be targeting about 2000. It's not going to be about 1-to-1 risk reward ratio, but this is the current price level that we get. If you want to have it a little bit lower in terms of stop loss, you would probably have it at 1975. I wouldn't take that risk because if price moves below 1982, it is likely going to take out 1975 as well. So I wouldn't want to have my stop loss at 1975. The reason why I have my stop loss at 1982, it is still currently below the range that we have intraday wise on gold. But yeah, I wouldn't do anything with the current positioning. I would just leave it as it is. Let's take a look at the other currencies. See what the market reaction is. Aussie USD should be at range, very choppy. Yeah, you can see that. So we got up from the Aussie USD. Aussie USD was hedged anyway. I don't like that. The Euro USD, we're not really going anywhere. It just comes back to the current price level before the news release. So not ideal. Doesn't matter if you buy or sell. It's still going to be a choppy trade. I think the only one that you can actually still hold or count on is still pound USD, but obviously that would be on a separate trade. That's more of a swing trade. This is the trade that I actually posted out this morning on the Telegram channel. By the way, the Telegram channel that I do is actually different from the one, the main Telegram channel. My Telegram channel is actually more for the Indonesian traders, Indonesian speaking trades. But I think some of you are there in the Telegram channel. Chucks, you're there, right? Yeah. The news number, I would explain it. Let me just see if I can bring out the numbers without crashing anything. Because I'm doing this on a notebook, so I'm actually not in my current position. I'm actually in Japan. It's pretty late right now. But yeah, so my notebook is currently pushing out an external 4K monitor at this point in time. It's really hard driving this. But yeah, let's talk about the number. So obviously this is the main focus, right? So we got that drop from 3.2 to 3.1%. This is expected, okay? The core inflation is also as per expectation, as per consensus at 4%. So we actually don't see that. This is the problem. We are expecting 0% growth we are getting 0.1% on the monthly growth on the CPI. The core inflation rate grows from 0.2 to 0.3%. This is as per consensus, no big deal. This is a problem that we have on this trade today. At 0%, picking up to 0.1%. I don't think it would actually have a huge impact. I don't think this is actually going to impact the FOMC's decision. I'll be honest with you. And with the FOMC, in terms of what the FOMC's dot plan is, I don't think the dot plan is going to go all the way to a full percentage cut in 2024. I would say about 3 times 25 basis points cut could be what the FOMC is going to announce. I don't think March is going to be the month that the FOMC is going to start cutting rate. I think it would actually be about June, July, about there. Just a little bit of a glimpse into the FOMC tomorrow. Okay, cool. I think we can wrap it up a little bit earlier, unless you guys have any questions or any requests for anything. But out of all the trades there, I think you would still be better off looking at the outlook. Pound USD is dropping down really quickly here. But as I say, with the Euro USD, the concern that I have is at 1.08. That would be the level to watch out for on the Euro USD, because if we highlight Euro USD and the focus at 1.08, take a look at what happened. This is a very classic liquidity sweep that happens. Price push through 1.08, takes out a lot of the order types, including our orders for tonight. And yeah, it does come crashing down. So I'm looking at this as a traditional liquidity sweep that we are looking at on the Euro USD. This is just a liquidity that's been taken out above about 1.08 to 1.0825, and it comes back down. I think if you want to go short Euro USD and Pound USD, I would be okay with that. But just keep your wits about. I have a high confidence in what the FOMC's projection is actually going to be. As I said, I don't think we are looking at a percentage rate cut in 2024. I think the FOMC is probably going to announce 50 to 75 basis points cut. So it will be 2 or 3 rate cuts in the dot plan for 2024. Okay. FOMC is probably going to say that they are not going to start cutting rates in March. They would probably do that maybe in May, June, July, right, in the second quarter, or maybe at the start of the third quarter in 2024. Now, with that in mind, that means I'm actually not biased at all. I actually do have a view that the FOMC would actually be a little bit more hawkish than what the market is speculating. So I prefer a swing positions against the US dollar. Okay, so I expect the US dollar to actually strengthen a little bit. In terms of the Euro USD and the Pound USD, as I said in the outlook this week, in terms of positioning, I think there's actually room for Euro USD to go to 1.07, 1.0650. I think that range is still possible for the Euro USD. For the Pound USD, anywhere below 1.2550 would actually trigger further drops in the Pound USD. For Pound, the one from the trades was obviously out, but my view on the Pound USD and the Euro USD is that I do see a little bit of an order block. There is a liquidity sweep that happens on the Pound USD and the Euro USD. My positioning on the Pound USD, I would actually be short Pound USD. For gold, I don't typically trade gold, but if it drops down below 1982, I think it would actually drop down even further. And my point of view for gold, I think it should actually go down to about 1950, but that's my point of view. Again, my point of view is driven by the thought that the FOMC would actually be a little bit more hawkish. Okay, I don't think they would aggressively cut a full percentage point in 2024, because there's a lot of risk if they cut too much, then whatever they've done to curb inflation is going to be wasted. So that's my point of view. So I do have an opinion on the FOMC. As I said, we're expecting maybe 2 to 3 25 basis points cut in 2024. I think that would be what the FOMC is going to put in on their dot plan, which is going to get released tomorrow. Is it to choose pair as gainers? I think we're done, right, for the hourly. And you see the close below 1.2550. Good thing we have that stop loss. But for gold, I will leave it as it is. In terms of gainers, I think the US dollar is gaining. I think market should already be pricing in for a potentially more hawkish FOMC, and that's what I think the market is actually going to be doing leading up to the FOMC. And if they do come out hawkish, we are in a good position because we already started shorting the pound USD and the euro USD. But that's my opinion for a swing trade. Okay, cool. Well, that's a wrap. Thanks for supporting the live trading sessions in this year. I hope you guys like the session that we do for the CPI and the NFP, and would be expecting more to do in 2024. I think these live sessions is a staple at this point in time. And again, the performance so far, I've reviewed our trades, and I think we had 2 losses out of we did this for about 7 months, right? So that's 14 live trades. Not too bad losing out on 2 live trades, but 12 are okay. So yeah, overall, it's been great. Just keep in mind the news today is still going to be choppy. I don't think it will actually have a lot of impact. If markets stay sideways, just keep that in mind. Be mindful. There's a lot of risk. Do I do live on the FOMC tomorrow? If I do that live at where I'm in Tokyo right now, it would actually be 4 in the morning. It'll be way too early. All right. I'm actually here for work, not vacation, but yeah, a little bit of a vacay as well, which is good, just to balance the lives out a little bit. Okay, that's a wrap for the English session. Have a fantastic holidays for you guys, English speakers. I don't think I get to see you again this year, but Indonesian sessions, I think I still have you a few times this year. But anyway, happy holidays. Enjoy the end of the year. And if I didn't see you this year again, if any sessions didn't come up, then yeah, Happy New Year. But yeah, have a fantastic time ahead. And I'll see you real soon.